Hi friends, this is C. Ashwini Rastogi. So let us come again, second another important video for your company tax rate. So you strategize your company tax rate. If you are paying 25%, why you are paying high tax rate? So 17% is available. You can choose your new option, that is under section 115 BAB. So now we are discussing company tax rate for manufacturing company and other company as per under section 115 BAB, 115 BAA. Let us discuss today. So what is the tax rate for new company? 15%. So if you are a manufacturing sector, I suggest you, if you are running in the old company, you don't in the new company, you start before 31st March 2024 in new company. So tax rate is much cheaper. It's similar to the Singapore rate. So 15% after add-on surcharge and higher education sets, it would come at 17%. So what are the features as per section 115 BAB and what are the features as per section 115 BAA? We will discuss. So BAB is applicable in respect of domestic manufacturing company and BAA is applicable in respect of other domestic, maybe trading company. So tax rate is 15%, surcharge is 10%. So after add surcharge and higher education cess, the effective tax rate is 17.16%. But in case of trading company, tax rate as per BAA 22% plus 10% surcharge, so effective rate is 25.16%. In the both system there is no MAT. So what is the MAT? MAT is minimum alternate tax. So if you are a loss for the income tax computation, you have to pay MAT for the book profit. So that is the concept of MAT under section 115 JB. But here there is a no concept, you have to pay tax. So what is the manner of computation? So income tax on which concession rate is applicable. The rate of tax is 17%, is applicable in respect of income derived from incidental manufacturing or production of article of things. So tax rate is 17%. So here tax rate is 25%. So such income would be subject to tax mentioned in the rate and the tax rate is 17%. So this form we have to file in for choosing the BAB option. If you don't file this form, the tax rate is applicable 25% plus normal rate. So this 10 ID must be filed for availing the option of 115 BAB by filing your form before the assessing officer online before due date of ITR return. So another form is 10I is filing required in respect of choosing lower rate under section 115 BAA. If you don't file, forget to file, the normal tax rate is applicable. So friends, we are here for strategic tax planning. Suppose your turnover is not more than 400 crore, definitely you are not a Reliance or some big player. If you are such a way, you come another way. The tax rate is as per 115 BAB is 17.16%. So guys, you can type this website myca.live. So you can go this page, strategic tax planning. So all option is on checkbox made. You can find out what is your tax rate. So if you fall at 115 BAB, your tax rate is 17.16%. Suppose you are not in the trading activity, so tax rate would be 25.16%. So this is tax strategic planning. So if you are doing your activity in the old company, you come out and avail the 115 BAB provision and file the form 10 ID before due date. Your tax rate is much similar to the Singapore tax rate. So now I discussed what is small company. That is a different topic, but it is relevant from the audit point of view as well. So small company is defined under section 287 of the Companies Act. So if your turnover is less than 40 crore for the financial year 23-25 4 onwards, relevant for the financial year 23-24, your turnover is less than 40 crore, you will be treated as small company. So once you become the small company, there are many benefits. So why it is different from the MSME? For the MSME Act 2006, the definition is look like this. Micro company, investment in plant machinery is less than 1 crore and your turnover is less than 5 crore, you will be categorized as micro company. If your plant and machinery investment is less than 10 crore, turnover is less than 50 crore, you are a small company. So guys, don't confuse the small company definition as per the MSME Act 2006 and small company definition as per the Company Act. So as per the Company Act, your turnover less than 40 crore, you will be small company. As per the MSME, your turnover is less than 50 crore, you will be small. So if your turnover is less than 10 crore, what will happen? First of all, you will not require to deduct TDS on purchase. Yes, TDS on purchase. If your turnover is more than 10 crore and you are purchasing more than 50 lakh from particular vendor, you are required to deduct TDS at 0.1% on in respect of purchase, right? So section 194Q is talk about the TDS on purchase. Simultaneously, one section is 206C1H, TCS on receipt against the sale of goods. If you sell the goods, collect the money, you have a responsibility to collect the TCS also. Suppose you are a more than 10 crore turnover and selling a goods to a entity having who is purchasing more than 50 lakh, you have to collect the TCS also. So one thing is you have a responsibility in respect of purchase to deduct the TTS, and another is responsibility in respect of sales, collect the TCS as well. So these two provision is applicable once you trigger your turnover more than 10 crore. So guys, if your turnover is less than 10 crore, don't worry this provision. So why you are waiting for? You incorporate a new company. So guys, this I am not giving you well advice. Evade the tax. You might be captured for GAR provision in the income tax act. So must analyze your the company tax structure. This may be some situation to change your company structuring so that your tax rate would be neutral. First of all, from the angle of small company, from the angle of income tax perspective also, if your turnover is less than 10 crore in the previous year, the section 194Q 206C1H in respect of sales TCS is not applicable. So I am discussing here, assuming your turnover is more than 10 crore, you are buying more than 50 lakh goods from a particular vendor, or you are selling more than 50 lakh to a particular vendor. So buyer responsibility to deduct the TDS, seller responsibility to collect the TCS, any goods. The rate is 0.1%, and threshold limit is 50 lakh. Once the triggered, you have to deduct the TDS and pay the TDS on time and file the TDS return on time. So what will be happen if the both section are applicable on a single transaction? So this 194Q is responsibility of buyer, 2061C is responsibility of seller. So buyer will deduct the TDS, seller will not collect the tax. Suppose both has more than 10 crore turnover. Seller is also has the more than 10 crore turnover. Buyer is also has a 10 crore turnover. So buyer will say I will deduct your TDS. Seller say uh, I will collect TCS, and buyer say I will deduct TDS. So TDS will applicable and TCS provision is not applicable. This is the case. Suppose A Limited is selling goods to B Limited. B Limited say I will deduct TDS per section 194Q because I am having a turnover more than 10 crore in previous year. A Limited say I am also having a turnover more than 10 crore. You will sell the goods, I will collect the TCS. So in this case, B Limited will uh, deduct the TDS on purchase, but A Limited not collect the TDS on sale. So what happen if we don't deduct TDS on purchase? So in this purchase, 30% of purchase amount will be disallowed under section 40A IA, and seller will have to collect the TDS and file the return. So what are the benefit to the MSME? So Udyog Aadhar registration is definitely give you benefit. As per the MSME, small company definition is less than 50 crore. If your turnover is less than 50 crore, you can have a chance to get your money for invoice within 45 days. If you don't have any signed written agreement with the customer, you may get your money within 15 days. So it is a responsibility of the customer who is buying from the MSME, who is a small company or micro company, to pay your money within 15 days in event of signing agreement within 45 days, irrespective of days. Credit period is defined more than 45. So what are the provision is that small and micro entity get priority over the other vendor payment since section 43B clause H is applicable on the buyer. So buyer has a responsibility to pay you on priority basis within 45 days in respect of written agreement, or otherwise if don't have a written agreement, the 15-day period is covered. So if you don't get within 45 days, what will happen? Maybe case you will eligible to get interest also, and buyer is governed by the section 43B income tax provision. Their purchase is not allowed in their book. I am discussing today, if you paying your company high tax rate, you should structure your company in such a way so that tax rate is can be saved. Tax uh, is, taxation is allowed. Tax planning is allowed within the four corner of law. Tax evasion is not possible. Tax, tax evasion is not allowed. So you can plan your tax by modifying the structure, who is the holding company, who is the subsidiary, and after one layer of your another subsidiary company, so that tax can be mitigated. So tax can be saved by way of tax planning, that is allowed as per the tax law, and that is within our four corner of the law. So you must plan what is our tax rate, why it is high, what we can plan for next year before the start of another assessment year. If you do such make a some shell company and some shell transaction, definitely the gar provision attract to you in order to taking a tax benefit from that that is not allowed to you. So guys, I am advise you plan your company so that your tax can be saved, tax can be planned, not evade. Thank you guys.